what's going on today, apart from uh, central banks buying or coronavirus or whatever. What are the factors that are affecting immediately and directly the gold prices all over the history, or at least during the 20th and 21st centuries? Right. Let's look here at the gold price. But first, let me tell you the factors. Okay, the factors are: number one, wartime; number two, peacetime; number three, economic cramps. All right, so there are three main factors, and don't let any person lie to you. Those are the three basic and main factors: wartime, peacetime, economic cramps. Okay. Here's a chart from microtrends.net. Okay, I'm using it for the past 100 years. Okay. Of course, when I say that the wartime is a main factor affecting the gold price, most of you will think that the gold price soured during the wartime. However, the truth is quite opposite. Let's look here. The World War I started in 1914 till 1918. Okay, so here we see that the gold price tumbled dramatically during the World War I time. Okay, here in the World War II between 1938 till 1945. Okay, starting from here to 1945 here. Same, the price tumbled. Okay, the price went down. Why? Simply for that reason. Governments are selling their gold to buy other practical metals like steel, like nickel, like copper, which are used in manufacturing weapons and ammos. Okay, so governments need the other metals to manufacture weapons, bombs, bullets, aircrafts, warships, whatever. So they are selling their gold to buy these metals, which are nickel and copper, are the most popular during the World War. In fact, I couldn't find a chart for the metal or the copper at that for the World War and World War I and World War II time. But according to the numbers, I can tell you that the metal and the copper went up dramatically during these times. All right. And there is a small story here I would like to tell you for those who are not Americans or have never went to the United States. There is a coin in the United States called nickel. It's for 5 cents. It's 5% of the dollar. This coin was used to be made from nickel metal. All right, that's why they called nickel. During the World War II, the nickel metal was replaced by silver because the nickel was much more valuable for the government at that time. They needed it for making weapons, while silver has no importance during wartime, so they used the silver for making coins, and that was between 1942 and 1945. So if you had any any nickel coin between 1942 and 1945, you'll find it made out of silver, 35% of silver instead of the nickel metal. Alright, this is during the wars. The two major wars in the 20th century, we found that the war factor affected it by dropping the price dramatically, and we have understand why. Let's see the second reason, which is peace times. Okay, peace times, simply will find that the price goes up. It might goes up or it might go down, But let's have a look here at the silver chart. Here, the silver chart, we can see that the price action is the same as gold. Here is the World War One. The price was around 18, then dropped to 10 or 9 at the end of the war. World War II, it was 12 and dropped to 7. Right, and here is the gold price ratio. Okay, we can say that the gold price ratio is the peace factor is has a higher influence on the gold silver ratio more than the gold or the silver prices. So we found that during the peacetime, the gold silver ratio goes to the bottom here and here and here and here. However, during the tensions time, we found that the gold price ratio rose up, like as we can see here. Okay. Okay. Now the third factor, which is the economic cramps, and it like the days that we have today, the coronavirus, the media propaganda about the economy is collapsing, the dollar is going to be demolished, we have to go back to gold, we have to use back the silver. So the media is playing a very good role, apart from the coronavirus and the because I'm not so much in that topic, but apart from that, we can say that we are now during an economic cramp. People distrust the paper currency, and they have a very strong tendency to buy gold and silver, and the silver, of course. Right, the silver has just started to rise during the last days. Okay. All right. So here we can see that the gold had touched the 2000 level, the highest all over the history. The silver, between the gold and silver, it has crossed over the 110. Okay, that is the tendency of or the action people take during the economic cramps. Let's see during the 20th century what happened and what was the economic cramps time. First, the Wall Street collapse, okay, in 1929. So between the end of the World War One, okay, the price turned up a little bit. It used to be flat between 1920 to 1929. There was no major events during this period. Then in 1929, a lot of economic actions occurred. There was an economic collapse in Germany because the mark was had a gold cover, and they couldn't repay or exchange the paper money for the gold. At the same time, the Wall Street collapsed in 1929, and the gold soared, fly to the sky, okay, skyrocketed between 316 to 663. Okay, so it doubled in 5 years. It kept raising and raising and raising till the end of the economic crisis in 1934, 1935. Then the World War II started after that. The price starting to drop. Okay, here in 1944, something major happened. There was a treaty called Bretton Woods Treaty. Okay, what is the Bretton Woods Treaty? The countries were involved in the World War I and World War II were so exhausted, and they were not able to fulfill or pay off the paper money or exchange the paper money for the gold. So they started canceling the gold cover or whole of Europe. Okay, the last country was Britain. That it was in 1944, and the United States take the leadership from that year. They decided that every ounce of that any person hold $35 can go straight to the United States Federal Reserve or the Treasury, or I'm not so sure from this point which body precisely has to exchange dollars for gold, but anybody had gold at that time after 1944 can simply go to the United States and change it for gold. $35 per ounce. Alright? So what happened from 1944? After that, the gold price, the fair gold price at that time was around $500 per ounce. However, on the other hand, if somebody had dollars, has exchanged his currency to US dollars, he can simply send it to the US and exchange it for $35 ounce, 1 ounce per $35. So any person could buy from the US government the gold for $35 instead of $500. So a huge difference. So the amounts, the price of the gold tended to get lowered and lowered, tumbled and tumbled and tumbled. And then here in the late 60s and the late 60s, a war in the Middle East break out. The gold raised a little bit, small, a very slight amount. Then in 1971, what happened? In 1971, President Nixon decided that the Bretton Woods Treaty is null and it's cancelled, and any person who holds US dollars is not going to be able to exchange it for gold anymore, and the US Treasury is not going to pay off the dollars for gold. Starting that, what caused the gold price to skyrocket here for like 10 years. Look at that. The gold was what in 1970? Around $200, 238. So till 1980 it was 2246 cents. That was in 1980. And that was the highest all over the history. So the gold price tended to rise and rise and rise and rise. Okay, so in 1979 there was a peace treaty in the Middle East, and everything settled down after the war ended in the Middle East. Okay, I don't call this I don't describe the period between 1967 and 1979 as a wartime. No, it was an economical cramp time, because the war was in a specific part in the world that had economic effects on other countries, on Europe and the US. It didn't have a direct effect, a direct military effect on the US, or a direct military effect on Europe. No, it had just economic effects, like the oil prices was high, there was shortage in gold, in oil inventories. So that's what caused the economy to cramp during that time, between 1967 and 1979, when the peace treaty was signed in the Middle East. The peace treaty was signed in the United States, in fact, between the Middle East parties. After that, starting from here, a peacetime. So the gold started to rest now. Now why the price is moving like that? Why what makes the price skyrocket like that? Okay, during this time, and it's the people's action. It's the Novara's action, so to speak. So when you get panic, you will take all of your money. People take all of their money. They are not going to are not spending on tourism. They are not spending on shopping. They are afraid from the future. So they turn all their paper money into gold. That's what people do in that time frames. Okay, same is happening during World War. The war happened during the World Wars, but the government spending was much more bigger than the people's purchases. The same happened here in 1929 after the Wall Street collapse. the first economic crisis. Okay, so people were afraid that the government was not able to uh, apply its promises, or the economy is going to collapse, or the dollar is going to collapse, or the economic system is going to be changed. These regular propaganda is happening here. What happened here during the economic the world economic crisis in the 20s and 30s, and same happened during the Middle East war. And of course, add to that the United States decided to cancel the gold cover system, so the prices skyrocketed like that. Okay, went vertical. Here's the silver had the same reaction here. Had this same reaction here. Right, after 1979, everything people want to spend, though, so they sold their gold and start spending again. Everything went right till the year 2001. 9/11. Okay, 9/11. The prices went up again to the highest, and it retraced, but it didn't retrace so much like what happened here after in the 80s and 90s. Didn't retrace that much, or like here after the World War One, or here after the World War Two. No, it retraced like around 38% and stopped in that level. Okay, in the level of 1200, 1400. Okay, today, because of the coronavirus propaganda, because of the lockdown, because of the oh my god, the economy is collapsing, the dollar is going to be destroyed, the system is going to be changed, the world after coronavirus is not like the world before coronavirus. All of these people are afraid, and they are buying gold to the maximum. They are buying gold as much as they can. Alright, here's my advice. If you didn't buy gold, don't buy gold right now. You are going to regret it, because everything, it's a couple of months. The coronavirus is not going to stay like that forever, and the prices are going to relax again. The market is going to relax again. The prices are going to tumble again, like here after the 1979, after the economic cramp of the Middle East war. Everything went alright, and the prices went down again. Here, in 2011, it reached the maximum because of also there was revolutions in the Middle East. Okay. Now after that, the gold price went down. Here again, the coronavirus thing, the prices went up so much. Now, couple of months, and the prices are going to be down again. If you would like to invest, my recommendations. Okay, it may be a little bit late, but it's you may have time. It's the silver. I believe so much in silver at this time. Yes, me personally, I bought physical silver. Because what? Because the price was very seductive. I bought it at the 16. It was 16 at when I bought it, and now it's around 25. The price is around 25. So if you would like to buy some physical silver, it will be a good choice. You still have time. I believe, me personally, by the end of this year, the silver is going to be increased. The silver is going to be doubled from the old price, which was around $15 average. So I believe it's going to be reach the 30 level, and silver is much more stable than the gold. So when it's going to reach the 30, it's going to stay there for maybe 10 years, right? So the ratio also here, the gold silver ratio was the highest in the history. Okay, this is the first time that the difference between gold and silver reached that level, which was 110. Now it's relaxing a little bit. purpose. I believe you still have a time to buy some silver. Right, don't buy it online, because online the spread of the silver is very, very high. So avoid buying silver online, because if you had any losses, it's going to be massive. It's going to be 5 times the gold. So don't buy online silver. Buy it physically. Okay, buy some physically and sell them physically. Maybe after a year from now. If you are a speculator, if you are a long-term trader, keep them. You are not going to lose the value. And if you don't buy gold now, neither physically, neither nor electronically. Don't buy gold. Don't touch it. Don't touch gold now, because it's at the top. I will never buy gold. If I'm going to do anything for gold, if I'm going to trade it, I'm going to short it only. But I'm not so sure about the correct. It's going to go down. No way. No way that it's going to get higher than that, unless there is a real crisis. There is a real economic collapse. It's not only a cramp. It's a real economic collapse. Let's say the US dollar really collapses. The American economy has really collapsed. In this case, the gold may go way higher than that. But I see this as a much more fictional assumption. I believe that everything is going to be alright by the end of this year, especially after the US elections, and the gold price is going to retrace one more time to its past levels and maybe lower. If I'm trading the gold in any mean, I'm going to short gold only. Otherwise, I'm outside the game, not trading gold. Alright, this video was about gold and silver during this time. I hope I could say some beneficial information, and good luck for everybody.